Saudi Arabia says it will rely on fiscal loosening to balance out the tight monetary policy imported from the U.S. Federal Reserve. The Minister of Economy and Planning, Faisal Alibrahim, told us the kingdom is also closely watching the effects of turmoil in global banking.
We're still assessing what the impact of the recent events in the financial market would be, and I think it's been up and down and changing dramatically. So we're closely monitoring that. But taking a step back, the World Bank, the IMF had certain views on the global economy. We don't necessarily disagree with that. We believe Saudi Arabia will be able to achieve its target of 3.1 forecasted at the budget announcement of 3.1% total GDP. And we're focusing more on non-oil activities growth, and we think and we're planning to make sure that they grow at the same pace we saw in 2022 or faster because of the change in oil. I think inflation-wise, the story has shifted a little bit in the last few weeks. First in the U.S. when we saw the numbers, and then when we saw the announcement with the hikes, and then in Europe more recently. While there are pockets where inflation is being controlled, it's not necessarily related to energy prices or others. So this makes us think about what kind of inflation impact will have on our economy. That said, I think Saudi Arabia has witnessed top-line inflation decelerating a little bit in terms of its pace last month by 0.3 percentage points. And we think overall, globally, even the food, specifically on food products, it will normalize and it will be in a better position. We're still monitoring what that will have as an impact in terms of our own inflation rates, and we're intervening like we did 9 months ago as needed.
Yeah. And with the oil having come off fairly significantly, are you reassessing at all yet the projections for the budget surplus for 2023, or are you still confident that that number is going to hold throughout the course of the year?
We think long term. We focus in terms of the oil market on long-term market stability, as we discussed, but we're thinking very long term. And I can't be very frank with you. We always assess different scenarios and look at what the outcomes or the implications can be, and we adjust as needed. We believe it's too early to tell, and we feel very confident in the long-term view that we had earlier.
Yeah. And you mentioned economic growth here in Saudi Arabia. Obviously, the pace of expansion has been very fast. Is growth fast enough to achieve all of the big ambitions that the country has, or is there still more that you want to do to boost the pace of growth to meet your goals?
So last year we witnessed a GDP growth rate of 8.7%. During the year, certain quarters even achieved on non-oil activities growth that has never been witnessed this much in the last 11 years. So overall, non-oil activities growth has been healthy. Definitely we want to unlock more avenues for growth, and that's part of what we're doing in and day out. We think the upside on tourism, the upside in the new industrial strategy and it focusing on export-driven approaches, but also the supporting and enabling sectors such as logistics and the progress we're witnessing there, we'll see a huge upside. The private sector, PMI, as you saw last month at 59.8, 58.9, I can't recall exactly, the highest in 8 years. This is only signaling that the private sector is betting more on the Saudi economy, and we think that we're going to see further upside moving forward.
And what can you do? Because we're at the financial sector conference now. There's obviously a big gap between the funding required for all the projects, all of the investments that have been announced, and the scale of the Saudi banking system. What do you do to bridge that gap?
There's always, we have plans to bridge all the gaps that we could be facing. I think the depth of the financial sector has witnessed a lot of progress in terms of governance, but also in terms of complexity of the products that are available, and we're only getting started. There's a continuous discussion, debate in the government, how can we turn the financial sector so it is deeper. Of course, you're witnessing an expansionary fiscal regime that is creating a lot of growth, that is attracting a lot of companies, operations, and people. Our deposit base is growing as well. So we believe overall there will be more and more opportunities to more sustainably fund all of these projects as we go forward. We're very confident in the ability to fund everything we set out to do till 2030.
And how are you going to be looking at allocating both the surplus from last year and the anticipated surplus for 2023?
As we said before, we discussed this before, Matthew, either replenishing reserves, paying off debt early, building up the savings again, or accelerating some one-off investments that were slowed down or strategies slowed down because of COVID. Ultimately, this windfall or this surplus will continuously be managed in a certain way. Certain layers call for certain governance procedures for us to enact to prioritize where the remaining funds go.